Well, hello, friends, and welcome to today's live level conversation. Whether you're joining me live or catching me on replay, happy Thursday. Let's dive right in.
And now, get ready. I present to you Level Up with Winnie Sun. Market Update. Award-winning financial pro. Welcome to Level Up with Winnie Sun.
Well, hi, friends. I'm Winnie, your host, an award winning financial pro, Forbes contributor, and a CNBC council member and contributor. And we are streaming here live. And it is wonderful to be here with you in this beautiful December. So, wherever you're joining me from, thank you so much. Jump in, say hello, introduce yourself to all our friends here. It's great to be here with you. Now, the market's just about to close. We're talking about 5 minutes left. And currently, the Dow is up in the positive at 665 points in the positive, and it's been holding very strong. Nasdaq though is down in red territory, down 72 points, and the S&P 500 also in the positive, up about 12 points currently. Now, part of why that is because there was some news that came out this week, and in fact, yesterday, Fed Chairman Jerome Powell came out to speak to us. Now, for those of you who join me each and every week, we've been really paying attention to what's happening here in the United States in terms of inflation and interest rates. And Jeff Cox at CNBC is reporting that, in fact, we have a third rate cut for the year 2025. Right before the new year, the Federal Reserve has cut its key interest rate by 0.25%, now targeting 3.5 to 3.75%. This does mark the third cut in a row, but now going forward, there's a lot of uncertainty. Fed Chairman Jerome Powell already said that, well, first of all, there's not going to be another cut this year, but also there might be another cut next year. But, that's not the complete story. Now, there was a split vote in terms of whether or not to cut interest rates. The vote came out to 9-3. Governor Stephen Moran actually wanted a deeper cut, while regional presidents actually opposed any cut at all. So this is sort of the last time this many dissents have occurred since 2019. The Fed reused sort of cautious language that they shared in 2024, hinting that future rate cuts may pause depending on incoming economic data and risks. But if you've been talking to anybody, unless you've been living under a stone, you know that we are full-blown layoff season right now. It is the last quarter of the year, not to mention that we are seeing record levels of layoffs since the beginning of the pandemic. In fact, according to the Fed's projections, just one rate cut is expected in both 2006 and 2027. That being said, they have a long-term target of 3%, indicating sort of limited room for easing. However, there is more to this story. And why is that? Well, President Trump is eyeing a new federal chief here. And this is being reported by the New York Times, Kobe Smith, talking about how, Chief Fed Chairman Jerome Powell's term does end pretty soon. It's actually supposed to be ending May of 2026. And President Trump hasn't been shy of announcing that he can't wait till that happens. He's already announcing a potential replacement is in process of being solidified, and they're saying that this could actually mark the biggest chance yet for President Trump to reshape U.S. monetary policy. Now, we do know that currently, rumor is it that Kevin Hassett leads this race. In fact, a former Trump advisor and current national economic director, Kevin Hassett is, of course, the front runner currently. President Trump has openly praised him and confirmed that lower rates are his top priority in choosing the next Fed chairman. So we'll see how this unfolds. So currently, we've got one rate cut this week, and possibly one next year, but what happens after May with the new Fed chief, we'll see what happens. If in fact the new Fed chairman is being chosen with the understanding that he or she is needing to do more aggressive rate cuts, well, we'll see how that affects the rest of us, right? Of course, we would like more rate cuts, but that being said, we also want to make sure that more Americans are able to afford the things they need to afford, and also, of course, that jobs are steady and people can actually you know go ahead and provide for themselves financially. That's a big thing. Now, speaking of changes, let's also talk about what's been happening in the world of entertainment. This is being reported by the New York Times, but this has also been shared all over financial news, talking about what's going on with Paramount, Netflix, and really the hostile bid for Warner Brothers Discovery. And what's that going to look like? Now, Paramount is going full on Rambo here. Just days after Netflix announced a $83 billion deal for Warner Brothers Discovery, well, Paramount launched their own surprise $108 billion hostile takeover bid, bypassing the board and appealing directly to shareholders. Now, Paramount's proposal includes a $30 per share in cash and covers all of Warner Brothers Discovery, their streaming platform, their studio, their cable channels, everything. So unlike Netflix deal, and Netflix deal was a little different. They actually excluded CNN and a few other assets like that. But Paramount says, this offer has a better shot at regulatory approval, while Netflix bid could actually raise antitrust issues due to its already very dominant position in streaming. So this is something that even has some ties to the presidency. Jared Kushner, as you know, the son-in-law of President Trump, his group Affinity Partners and Middle Eastern sovereign funds are backing Paramount's bid as well. So President Trump has expressed interest in reviewing the Netflix deal, of course, adding to that political complexity there. But we'll see how that unfolds. But it does seem like more and more companies are becoming one, right? The larger eating the smaller and whatnot. Who would have known that there would be now companies such as Netflix, which, let's be honest, isn't like the oldest company, is now in the position, such a strong position to make bid for such a traditional company like Paramount. So Netflix, of course, is defending their deal by comparing its competition, not just to Disney and Hulu, but also to YouTube, TikTok, and even Amazon, saying that, the streaming market is just part of a broader entertainment landscape. And this is just how it's going to be. Now, any of you who are watching us live probably agree with that, because we are streaming here live with you. And entertainment now, or information, comes in all shapes and forms, and some are paid and some aren't paid. Now, that being said, I want to continue to my next story, because this is one that I think most of you are going to feel good about, and hopefully you feel good about. This is being shared by the Associated Press, talking about the one and only, Mackenzie Scott, previously Mackenzie Scott Bezos. Mackenzie Scott, ex of course, the one and only Jeff Bezos, has donated a whopping $7.1 billion to nonprofits this year alone, in 2025. In fact, her largest annual contribution to date, bringing her total giving to about $26.3 billion since 2019. So these are so Mackenzie Scott's donations are a little different than some that other people make or other companies make. This isn't completely unique. I know there are a lot of people that give this way as well, but how she likes to give is she likes to give with a no strings attached policy. So her gifts are unique, and then they come with no restrictions or reporting requirements, empowering nonprofits to go all in, to use funds where they feel like they are most needed. So over $783 million went to historically Black colleges and universities, and other really large gifts, including $70 million to UNCF and $50 million to the Native Forest Scholars Fund as well. So she takes a very quiet, very direct approach. Most organizations actually receive funding without even applying or even contacting Mackenzie. She just decides where she wants to give. Now, donations are typically delivered via intermediaries with very little warning. So I'm sure they're very surprised and probably pleasantly surprised. So for nonprofits such as 10,000 Degrees, actually, McKinsey provided unrestricted $42 million gift, double their annual budget, which would help them expand expansion, innovation, and long-term investment through endowment as well. So good for her. She even gave money. I read that she even gave money to one of her college roommates who, when she was struggling financially during college, actually helped her out, and went ahead and paid it forward and gave donations back to her as well, which I thought was pretty cool. I want to say a quick hello. I see so many of you joining us on YouTube Live, on Facebook, on X, which used to be on Twitter. It's great to see all of you. Thanks so much for making the time. Now, I want to kind of talk about another thing that's happening with Elon Musk. Now, Elon, of course, is definitely a popular figure in business news, but this news, I think, is going to be fascinating to many of you. You all know the company SpaceX that he's created, pretty incredible entity. Well, Elon is now eyeing a $1.5 trillion IPO for SpaceX come 2026. This is it. Elon is reporting preparing a public offering for one of his other companies, and this could potentially be one of the largest IPOs ever. It's been reported in the paper today. So Elon, of course, owns nearly half of SpaceX, so a public valuation could more than double his current $461 billion net worth. The question is, at that point, what's another $1 billion, right? But this, of course, would give him easier access to tax-free funds via stock-backed loans, gives him more power, gives him more financial backing. He could be like basically his own bank at this point to create other companies and entities and then other projects that he's also working on. Of course, SpaceX has many people involved all through the years, but yes, that's the news that we read today, this week actually, and I thought it was an interesting one. Let me know what you think about that. Do you think that's just too much wealth for one person to control? Do you think this is great? Like, whatever you think, I want to hear from you. Go ahead and put in comments there so we can see. Now, I want to talk about another change that's happening because, another American company, NVIDIA. Well, NVIDIA, as you know, makes these really incredible AI chips. Well, for a long time now, many other countries have wanted to get their hands on these NVIDIA chips. Very valuable, very quick, very powerful, and definitely has some market dominance here. Well, President Trump has just greenlighted NVIDIA chips to be sold to China, even though there's been national security concerns. This is being reported by the New York Times. The U.S. has approved these chip sales. The administration has authorized NVIDIA to sell their H200 AI chip to China. This is NVIDIA's second most powerful chip. After months of debate over national security risks, the decision really marks a major reversal from earlier restrictions and has triggered bipartisan backlash in Congress, with lawmakers now, including Senator Warren, of potential military and economic implications. Now, President Trump claims that 25% of those chip sales, that revenue is going to go back right to the U.S. government. So this is a move that experts say actually could even violate U.S. export laws. But nonetheless, CEO Jensen Huang has been lobbying very hard to ease restrictions, arguing that selling chips to China actually strengthens U.S. tech dominance by making Chinese firms reliant on American technology. That being said, it almost seems reasonable. I mean, if you're selling these sort of chips to other countries across the globe, I would think that at some point, China would have access to the chips and possibly could learn and develop their own very similar chip anyway. So might as well let it be. So that's what I'm thinking. And it does seem like in this day and age, it's better to collaborate than to continue to push hard against. But we'll see how this unfolds. But that's the news. There's been a lot of controversy. Some people think that was a great idea. Some people think it's a bad idea. But I'll let you be the judge of what you think about that. Now, speaking of spending a lot of money, let's talk about another story coming out of CNBC this week. Well, big tech is going all in on AI, but not just AI here in the United States, but also AI in other countries. In fact, believe it or not, in just 24 hours, Microsoft, Amazon committed over $50 billion to India's cloud and AI infrastructure, which just shows how massive, number one, how much money there is, but how much massive confidence they have in India's digital future. So AI access for millions is what they're calling it. So OpenAI, Google, Perplexity, they're all offering free AI tools to millions of people in India, which expands access, and they want to cultivate like a whole new wave of tech engagement. So, of course, one of the big competition sort of advantages that India has is, of course, the cost of labor. They have abundant space, they have cheaper power, and they have an incredibly large, skilled IT workforce. If you didn't know already, a lot um, people from India have attended top colleges here in the United States. A lot of even their existing tech powerhouse in terms of employee force and um, uh, value engineers have actually been coming and helping U.S. companies for many, many years. So India is emerging and continues to emerge as a prime location for data centers, surpassing crowded markets such as the ones they've seen in Singapore. I would give that as an example. But yes, many companies now are doubling down. Amazon, in fact, following a prior $40 billion investment, Amazon now has pledged another $35 billion to scale their presence and drive job creation in India through the year 2030. So I know everybody's paying attention to China, but maybe you should be paying attention to India as well, many other countries, just to see that there's different types of talent and resources at even outside the United States, and how we're going to be able to coexist and work together for sort of a common goal and common good too. So that being said, let's continue. I want to talk about what's happening here also, in terms of what's happening with the teachers union. Now, this is a little different because we talked about OpenAI for education not too long ago, about how they're bringing AI to teachers and whatnot. But this is a whole different situation altogether. This is being reported on CNBC this week, talking about how the American Federation of Teachers, or AFT, they represent about at 1.8, almost 2 million members. They're now strongly opposed to the Senate's crypto regulation bill, because they're warning that this poses serious risks to retirement plans and economic stability. In fact, they're calling this bill reckless. They're saying that the bill is irresponsible, reckless, saying it removes critical protections for both crypto and traditional financial securities. In fact, this kind of has to do with their retirement plan. The union is particularly concerned because they say that this bill will allow traditional stocks to be tokenized and traded on blockchains, potentially slipping past existing securities regulations and endangering, of course, teachers' pension safety. And they're also warning that there's loopholes involved. This could inject more risk and unregulated assets into retirement plan portfolios, even when individuals think they're actually invested in something that's really safe. So curious to think how you feel about that. Do you think that crypto has a place in retirement accounts? Do you think not? I'll let you decide on that. I have strong feelings about this, but I think this is a chance where I think it's more important to see how you feel about your own retirement assets. Currently, if you have a 401k or a pension, would you want to have crypto in your portfolio? Or more importantly, would you want to have the option of having it in your portfolio? And if it's unregulated, how do you feel about having it in your portfolio? All right, the market has closed here. Let me tell you how it closed. The Dow closed up 646 points, not huge surprise there. NASDAQ did close down negative 60, a little bit of improvement. S&P 500 closed up 14 points as well. And so that's what we have this week. I mean, not a ton of I think big financial news, a lot more political news this week. But that being said, there's a lot of things to be paying attention to, especially as we're going into the holidays. I'm actually working on a piece right now talking about some of the financial moves I'll be making before the end of the year. And I'll make sure to share that as well. So thank you so much, my friends, for being a part of today's Level Up Live. Thank you so much for always joining us and being a part of our show. Do me a favor, hit that like and subscribe to stay in the know with all the latest financial headlines and insights, and to watch past episodes of Level Up with Winnie Sun. Definitely check out NASDAQ, Amazon Fire, Samsung, LG, and Roku, and many other, of course, streaming platforms where you're here with. With that, thank you so much for being a part of today's Level Up. If you share this online, make sure to tag at Winnie Sun so I can see your share as well. Be well. I'll see you again next week. Take care now. Bye bye.